I'm Debi Peverill, and you're listening to the weekly tip from Palin's Financial Training Group. Today I'm talking about maybe there's a couple things left you could do to reduce your income taxes for the 2020 year. As of today, there's 9 days left, and a couple of strategies come to mind that may apply to you. The first one is charitable deductions. If you are planning to make a donation for which you will receive a receipt, for which you will get a deduction on your 2020 tax return, then you have to have that dated by the end of 2020. So if you're going to do it and you haven't done it yet, you'd best get at that because 9 days left. The second thing would only apply if you have sold shares this year where you've recorded a gain. So when you sell a share for more than you paid for it, there's a capital gain that's created. Half of that is taxable. The only time you can use a capital loss is when you've got capital gains. So what you should do now is if you have had capital gains in 2020, you should take a look at your portfolio and see if there's any losers in that portfolio that maybe you should sell. Because if you sell them in 2020, you can take that capital loss as a deduction from your capital gains. If you were to sell those losers in 2021 and you don't have any other capital gains, well, you can't deduct it in that year. You'd have to work with the carry forwards. So this, of course, doesn't apply if the shares are in your RSP or your tax-free savings account. This only applies to shares that are outside of a tax shelter. Okay? So think about that. Not much time left in 2020, but there's two possibilities for saving some tax. Do you need to make more charitable donations, and do you have any losers in your portfolio?